Morning, guys. Just let me know if you can hear me. We'll get up and running. Don't know how you're there at the moment. What was I just going to get? That's right. Why that happens. All right, Lauren. G'day, mate. +1. Could just be me, you, and someone else, mate. Let me just get rid of a few things. That's probably about it. All right. Not much happened overnight. It was US. They were lucky they scraped through with some gains. To be honest, if you go and look at a chart, the last half an hour was a quick, short, sharp rally into the close. So it was buoyed just into the close. Um, I don't know how much everyone would put into it, but do some reading on ETFs. Everyone should just do some reading about ETFs and the amount because they've been growing rapidly. Exchange traded funds in the US and in Australia, probably more so in the US. They've been going nuts. Um, there's major concerns now that there's a lot of liquidity into ETFs that are skewing stock prices a lot because they get bought up into the close. Especially when they're trying to get something that's a relatively illiquid market and they have to get set because they have to balance the ETF coming to the close. They can skew prices, and maybe that's what had a bit of a bounce last night. But in saying that, there's a lot of liquidity that has to come out of the market if the proverbial hits the fan. And it's through the ETFs. As the market comes down, they have to keep selling, selling. So do a bit of reading. It's interesting to learn about that. Um, and there is some concerns that could cause a bit of a crash. Who knows? Who knows, to be honest, because they just keep growing and growing the number of ETFs, the variety of ETFs as well into the market. So it's worth doing some research on. Um, yeah, so not much happened overnight. This is our market. This was the close at 4 o'clock, and we had that big sell-off into the close. There was China PPI producer price of data that didn't come out. Well, it came out as expected, but it was weaker. So it's just shown some weakness, and we're obviously being dragged down because of that. That was at 11:30, so somewhere around here. So the market was sort of heading down to support. Numbers come out, and we just got sold down. We're targeting sort of this 65, 86 mark. Did bounce, just basically turned around, turned on a dime, and bounced through the European and US sessions. So interesting to see whether it's bounced up here and we get some shorts coming back in because I'm always skeptical of these sorts of things. You get this sort of bounce. Why did that happen? If we're happy to sell off because of China, why are we happy now to bounce all the way straight back up to where we started? So this is the 9 o'clock, 10 o'clock open. We pretty much come straight back to where we started. So the whole day's losses yesterday was cut. So the market can sometimes, grind back up on the futures, and they're sort of offsetting potentially negative day, and shorting into the futures, offsetting some sort of losses as they're trying to exit some positions. I mean, this is all hearsay, this is all guessing, but these sorts of things they do use the futures quite a lot. Funds will use it to hedge a lot, hedge entering and exiting. Who knows? Just guessing, but either way, you've got that resistance zone around that. It's a minor resistance zone around 66.39 on the SPY. We're looking to open up on the index around, was it 20 points or so, making back pretty much what I think we're down 30 something yesterday, making back most of those gains, those losses, sorry. And don't forget this is a 4 o'clock close. Would it close at 4:30? That was a close. So that last half an hour bar, you probably closed around about 66. So we rallied another half in the last half an hour trade, rallied a bit more. So the market probably about 20 to 30 points, I'd say it's going to open up. We are extended. We'll just have to wait and see how this goes. Wall Street, you can see that action was pretty much, it was open down. It was oscillating between slight gains and losses until that final. You can see that little pop up into the close. Um, Same with the S&P, little pop up into the close. That's your 8 o'clock mark. So this was your close. Well, that was your close bar there. So that's a good solid rally into the close. They pretty much finished flat. Nasdaq was lower. Germany, yeah, same sort of thing. This is an hourly chart again. It's drifted higher, which is not bad. In the UK, similar sort of action, drifting higher, but that to me looks heavy. Looks a bit heavy, especially on the FTSE. That could potentially be a lower high, jammed down. DAX is something different. They've come up in sort of this liquidity zone, which we've mentioned a few times, where they could find a reaction lower, some selling come in, or it could just keep going higher. I mean, the trend lately has been up. It's on the hourly chart. The last few days has been pretty much straight up, and it's been a hard trade if you're trading intraday. A lot of the moves, so this move here was after hours, this move here was after hours. So there's a lot happening after hours. You know, sort of in our session, after hours for them in the Chinese, well, the Asian session, the market's bouncing and kicking off, and then come open Europe, it does nothing. It holds on to gains into the US open, sees what the US does. Um, so yeah, there's quite a few factors. We're all waiting for ECB at the moment. ECB is out on Thursday. They're expecting stimulus and a rate cut. How much stimulus is the biggest question. Whether there's too much stimulus baked into the price, which would mean that this price is too high, in essence. We're pretty much, what do you call it, addicts to stimulus at the moment. The markets are stimulus addicts. Um, you know, we're looking at Japan potentially putting the stimulus into the market. We've got Europe, US cutting rates to stimulate. Yeah, that's not a good thing. I don't care what anyone says. You don't stimulate a growing economy. You stimulate a cooling economy. They're worried that it's going to collapse. Massive debt issues in the US. And it's a tough one at the moment because the markets are heading higher. It's really tough. So, and gold, maybe gold's a precursor to putting on risk into the market. So we drew up this scenario, which played out quite nicely. I mean, I know it's one of two scenarios, but you've got to play out both sides of the market. What would happen if this type of thing played out, which it did? You got your lower high, pressed down to support. So now, longer term, we're sort of down on this, probably expand that zone a bit into this zone on gold. Just because we've been heading south doesn't mean it can't. Why is that not? What's going on here? Cancel. So there's that zone where you've got the lows held up here. It's plowed through these previous lows, but it could extend down to sort of 14.80, which is another 10 to $7 away, $7 to $10 away. So it could easily extend and then bounce back up. You want to see some sort of reaction. This sell-off's been quite hard, and we know that because everyone was loaded long. So you're sort of expecting that type of thing to play out in gold. There was going to be some sort of correction, you know. Basically, the market's been powerful. It's had another go here. It had another go. And as that move through there, and even this move up through this previous high, as they run out of steam, whereas this one just kept jamming up through. You can see that move didn't stop. And it was really consistent and strong. This move through the highs before it started consolidating had to have a deeper correction. And the same here, that's not a sign of strength. So once you see that, you either go up or you go down. And things that have gone up really hard, you don't expect necessarily consolidate the highs. You expect more of a pullback, constructive pullback to clean out some of the longs. Because the market, if it just powers higher and then goes sideways, that's a massively strong market. And it's kind of rare thing to see. So this market has been quite strong. You expect, well, you do expect after you get this sort of washout, you do expect some sort of profit taking to come in. It doesn't necessarily mean, I mean, it could mean that if this keeps heading lower, it means that it's a risk off mode into gold and it's a risk on mode into equities, which potentially gold is saying that equities are going to be supported. If it doesn't hold up here, it just jams lower, but it is extended on the downside. We'll just keep an eye on that. Bitcoin, I thought I want to go to a daily on that one. I think there's some opportunity on the daily. If you can see, we're getting this support zone building, and that was previous high, pull back, charge through, and it's been 1, 2, could say 3 tests at that zone there, and I reckon that there is sort of the capping at the highs at the moment. So if we can hold in here, let's just look at a couple of things. This is an opportunity. I've just got my eye on at the moment. That's sort of your contraction into that support zone. If we start to hold a higher low and chop around, we're looking for this to and do this sort of thing, that's what I'm expecting to play out. You know, sort of if we hold in here, sooner or later it's going to contract and really compress, the market compressed. Markets don't like staying compressed to the point of agreement. They don't stay there for very long. They'll break either way. And if it's off some higher lows in here above this major support, it just means that the sellers are running out of steam and the buyers are starting to soak up, and they're going to have to start, if you want in, expecting it to go to 12,500, 13, 14, 15,000, even to 20. If that's your expectation, you're going to have to jump in earlier. You know, which means not waiting until it comes down to support, not waiting with a bid in there. You might have to start looking to buy a bit higher. And that's what the buyers will be contending with at the moment. Otherwise, we just jam straight through. But these contracted days down, it's not a sharp move down in one session. You know, a couple like this, it's more contained. So that's something to keep an eye on, Bitcoin and potentially other cryptos. And that would make sense after you got the strong move up. You need some heat to come out of the market and to reset itself before the next leg up. So eyes on that one. Let's just see where the overall market, see along 12 minutes. Cool. We're up 7 points at the moment. If we're right, we've another 10 or 15 to go on the upside. Let's just see where our DCN, probably going to get stopped on that one. It's not holding in there. So I think gold stocks, you'd expect to come under more pressure unless there's enough heat to come out of the market. It's probably, with gold, you know, new gold stocks at the moment, they've come off quite heavily the last few days with these moves down, as you'd expect. And we're down a bit more overnight, but we're right into the support zone. So there might be a bit of a chance to buy on support, buy off support, but we'll just have to see. It might be supported here when gold's hanging around that 1480 mark, 1490 mark, or just below 1500 on the futures. We might get a bit of buying into gold because if the equities are looking a bit shaky, we'll have to wait and see, and hopefully we don't get knotted on the cleaned up on the way. All right, so it's open up. Something up 6 at the moment. We're only a 4 past, so it's around the 6 park, 1006, 1007, 1008, where we would expect to see a little pop in the market. Let's see where the futures are. This is my, what have I got, 30-minute chart here. I'll drift that to a 5. And I just want to show you some trade opportunities from yesterday, just to finish up. So we're popped up into the highs. Where did we close? So we closed up here. So we closed around here. We just backed off from where we closed. What's that? 35, 26, about 10 points. So we may, look, it's either pointing to one or two things: a washout of the lows, just to clean out some of these late buyers. And potentially it's the higher low to continue that trend up and through 66.39, or the market's overshot the market. The SPY has overshot the market and you expect it to at least bounce back. It's all dependent on, so this is what, you know, for intraday trading, you're watching that open to see which way. And if this market looks like it's going to open up 20 and the SPY's still down there, it could be worth nabbing the SPY for a bounce. But it's all happening in the next minute or so. Just keep an eye on that. There's one other thing, I was just going to show you quickly. One thing. So this is the 30-minute, no, this is not. This is the 30-minute chart of the SPY. And I wanted to put it onto one other chart. That's not it. So I made a boo-boo. So this is what we've been discussing the last few days. So we're talking about inside out, outside in. Right, outside in. So you're looking at outside trade, sort of near the top end when things are a little bit extended, stretched, sort of towards the extreme of the move, and you're looking to sell or buy off the lows when you're extreme move, or you're looking for that continuation type style of trade. You know, inside out, potentially here, inside out didn't go too far, even an inside out down on the downside. So I think premise yesterday was if you're getting this inside level holding at 66.39, we expected potentially a wash out of that level. And then if it's going to pull back to the MAs, then you might get an inside out when it pushes back up to 66.50. Or if it holds there, you've got the same sort of trade, inside out, but on the downside, which played out quite nicely yesterday. It was helped along by data out of China. The negative just turned the market negative, but that you're looking for that inside out. You're looking for momentum. It was slowing. you're sort of at that even keel, and then momentum started tipping over. If you can see that, it started tipping over. So momentum's to the downside. You can see momentum is below zero here. So the selling pressure is coming in. You're going for that inside out style of trade. So all you're really looking for is a trade on the downside. So if we just flick over to the 5-minute chart, which this was that level we were just looking at. I've deleted that on this chart. You can see it was chopping around in here. Look at that lower high come into play, if you can see that. And it's sort of the M style pattern, I guess. But that was the inside out. So it was inside out on the 30, inside out on the 5 as well. So you had, if you could potentially have an entry through on the short side at 20, 66.21, say, your stops at, say, 5 to 10 points, depending on what you want to trade it. As soon as you ended up and close this candle, you can move it straight down. You close this candle, move it down, and all of a sudden, after about 5 or 10 minutes, you're in a profitable trade and potentially just chipped out around 66.17. But depending on the way you style it, that could have been a partial exit here, and then you follow the rest down with a lower high. So ideally, you're coming from a lower high, pops back up, builds a lower high, you stops here, you still hold in, move your stop down, and it continues all the way down. So that was a good sort of a trend trade on the downside with a lot of meat in that 30-minute chart. All right, so that's about it, guys. We'll probably finish it there. Let's just see if this can hold up as a bit of a buy in here and pop back up to 66.39. The ASX should be just about open. So it's up 14, so it's a pop. It was just what we're saying. We're up only 6, and we popped 8 points just on that sort of 6, 7 past time frame. So I'll see if that can open up around another couple of points into the close, but we still got the S's to come, which you could smack up another 6. So we're probably still looking to open up, another 6 or so, 5 points up towards the up 20 mark. Just watch this. Oh no, it might adjust. No, nothing much happened. So it's only up about 12, 13 points at the moment. So that SPY is right if you look at that. So a bit of a tentative market. All right, guys, thanks very much for joining us. Market should fly. You're hoping, mate. You're hoping. To be honest, I think it's looking a tad heavy at the moment. I'm hoping I'm not just being biased on the downside. I'm not being bearish, trying to keep neutral, but just go back to that 30-minute chart. Actually, let's go to the 30-minute chart here. That is the daily. I mean, if it bullish here, the problem is if we take out yesterday's lows on 65.95, it's got to a 30-minute chart. It's actually, this is spiking. It is looking sort of a tad more bullish than bearish, but we just have to wait and see if it can hover. If this compressed open is going to expand in the afternoon, expand through those highs at 66.60, which is another, 20 or 30 points away. Keep an eye on that. What was that 5-minute chart? All right. We'll finish it there, guys. Thanks for joining us. We'll speak to you again tomorrow. Cheers, guys. Bye.